Good morning, traders. It's 8:01 a.m. Chicago time on Thursday, the 27th of April, 2017. It's 9:01 Eastern US. Thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning is just ever so slightly bullish over yesterday. Very small. The leader today is the mini Russell, the small caps, up 4.6 points, 0.32%, followed by the Nasdaq, the Dow, and gold. Gold is up $1.70 at $1,265.90. The laggard today again this morning is oil. Oil seeing a gap down, it looks like, um, trading at 48.56. I did talk about oil wanting having a strong potential of dropping, but the base that was expected here is around 48.50, 48.50 for oil. We're right up against it at 48.58. And then, of course, the Euro Stocks and DAX took a small hit today, not much. The big news today is the ECB announcement, but there was a lot that came through yesterday. Lots of earnings pre-market, and yesterday Ford announced 39 versus 34 cents. Um, Potash is too small to go over, actually, 18 cents versus 10 cents expected. UPS announcing $1.32 versus $1.30 at 15.3 billion versus 15.2. And then overall, we have some political stuff that potentially is affecting the markets. Um, President Trump has announced that he will not terminate NAFTA after having conversations with Mexico's Nieto and Canada's Trudeau. Bank of Japan's interest rate on excess reserves remained unchanged at negative 10 basis points, negative 10.1%, and 10-year JGB yield target around 0% is expected. Japan's economy has been turning towards a moderate expansion. Prior continues to recover moderately as a trend. Exports have been increasing, and so on and so on. There's too much to cover here to get into the details. Eurozone APR, April Business Climate Indicator, came in at 1.09, exceeding the 0.82 expected. Consumer confidence final for April came in at negative 3.6%, in line. The ECB leaves the main 7-day refi rate unchanged at 0% as expected. It reiterates that key ECB interest rates remain at present or lower levels for an extended period of time and well past the horizon of the net asset purchases. Will continue to make purchases under the asset purchase program, which is also known as the APP, at the current monthly pace of 80 billion euros until the end of this month, and that from April 2017. If the outlook becomes less favorable, or if financial conditions become inconsistent with further progress towards a sustained adjustment in the path of inflation, the Governing Council stands ready to increase the program in terms of size and or duration. German APR, I keep saying APR, German April preliminary CPI month on month came in at 0% versus expected negative 0.1%. And then this morning, U.S. Initial jobless claims came in at 257,000 versus 254,000, so slightly worse. Continuing claims came in slightly better at 1.99 million versus 2.01 million estimated. Preliminary wholesale inventories in the U.S. for March came in at negative 0.1 versus 0.2 positive expected. And then also we got this morning at 7:30 Central, 8:30 Eastern, the March preliminary durable goods orders in the U.S. Came in weaker at 0.7 versus 1.3 expected. Durable goods ex autos came in at negative 0.2% versus positive 0.4 expected. So those are both worse. ECB's Draghi is still talking. Economic recovery becoming more solid with risks becoming more balanced. Risks do remain tilted to the downside. Downside risks have diminished further. Also says things are going better, but did not discuss any exit strategy at today's meetings. No need to discuss sequencing of policy exit at this time. No reason to deviate from the current policy path. A lot to cover this morning. There's a lot going on in the on the calendar today. Looking ahead, we still have some more. At 10 Eastern, we're looking for U.S. pending home sales from March, expecting negative 1%. Uh, Also, we're getting the year-on-year number, and then at 10:30 we get EIA natural gas storage change for April 21st, looking for 74 there, and then at 11 we a low tier number, the Kansas City Fed manufacturing activity for April, looking for 17 there. There's also EU's Juncker meeting, making a statement at 10 o'clock Eastern as well. After the market, we have Amazon, earnings from Amazon expecting $2.28, Google expecting $9.38, Starbucks expecting 45 cents, Intel expecting 65 cents, and Microsoft expecting 70 cents. So expect some movement there after the close today if you're trading the NASDAQ, Dow, or S&P. Wow, that was a lot. Let's switch gears and look at what we expected yesterday. Yesterday, the primary hypothesis was looking for a test up early. I did not give the market as much credit as it deserved. The market ended up pushing way up here. So I expected a push up and then selling in the afternoon. The actual movement was much higher. If we look at where the market went yesterday, it went to 94.75, retested 94.75. There was some news, a couple pieces of news yesterday that interrupted things a little bit, but the market pushed way up here to about 94.75, exceeding this March 1st point of control, the last point of control before new all-time highs, which would be at which would mean that we would need to exceed 23.98 in the current contract on a price-adjusted basis on the continuous contract. So having the market turn inside of the prior day's range was way off. Because of that, I projected the market dropping lower to 23.75. The market did not get down that far. It turned at 23.82 yesterday. We did get a neutral market. We had this impulsive move up right here, strong impulsive move down. So there's a fight here. This looked to me like capitulation. Both sides are active, and buyers are not able to continue to hold prices higher. One of the main things I want to point out this morning is the yellow line down here. That's the delta. This is the total delta right here. This bar graph is the total delta, volume delta, or the volume breakdown. This essentially measures the number of contracts that are traded at the offer. That adds a positive number, and it subtracts the number of contracts traded at the bid, which makes the number more negative. And so what this does is it's measuring the aggressor in the market. Okay, so it's measuring the aggressor in the market, and that's the overall number. I break this number down in this graph right here. I break this number down between the trades that are going off, which are aggregated, the trades that are going off that are 41 contracts or less in size, and the ones that are 42 contracts or higher in size. 42 contracts or higher, as you can see the labels right here. 42 contracts or higher yesterday, those are the bigger lots, or this is a kind of a proxy for the OTF. You could see that the OTF did not participate very much yesterday, completely sideways, essentially trading about 10% or less of the delta, uh, and it's the smaller size that was trading that was much more active. I want to spend a little bit of time on this morning just to give you a contrast. Look at the day before. The day before, it was the large lots that are participating here. You could see a strong buyer coming in and the market sustaining higher prices with the large lots participating on the buy side and the small lots being on the other side and participating on the other side much of the morning and then catching up to the large lots later in the day. You notice the small lots tend to move towards the large lots somewhere in the at the end of the session. Sorry, I'm losing my voice. And so we see that here, the small lots moving towards the large lots on the end by the end of the day. Those are intraday traders, balancing their book for margins and things like that. And yesterday, my point with this is that yesterday, the participation from the large lots, the white line, was fairly poor. To me, this looks like a temporary, even though it's a weak high, this looks like a temporary top to me right now. Okay, so I don't know what tomorrow is going to bring. I can only look as far as this current session, but right now, the market looks like it is not getting the participation that it needs. But there's a lot of news coming through, and then yesterday morning, what we had was a fairly weak low right off the open. The opening swing low was touched twice, and what I announced in the S5 chat room was that if we break back into the prior day's range, so let's clear that up. This is the prior day's high, the green line. If we break into the prior day's range, that puts us below the mid, into the prior day's range, below VWAP, and breaching the opening swing. I expected neutral. And with the amount of noise coming out of the market, of the news feed, we ended up pushing up, which was a loss, but we ultimately went neutral on the day later in the day. So a confusing trade yesterday a little bit, but overall the auction proceeds as normal. The point of control is higher. We did shift the point of control higher. Value has moved higher. Price has moved higher. And then this morning we're holding the lower end of the range. The market did not turn and go higher overnight. And I'm going to show you a little bit. This is what we got on the ECB announcement right here. Just noise. The market turned up in the later in the European after the European Open, but mostly we are completely balanced overnight with a very low, relatively low volume. There's not much we can glean from this overnight chart. I'm going to show you a chart of the Bund. Real quick, the Bund is the 10-year note, the German 10-year note, the key treasury um, commodity within Europe or the Eurozone. The Bund has been in a sideways pattern for some time, and this morning with the ECB announcement, you can see that it rallied, pull back to the mid, and rally again. Look at that beautiful pullback right there before the continuation, and it's tackling the upside of the balance zone that it's built over the last few days. So it's more active than usual because of the ECB announcement, but overall the announcement has been strong for the notes there and has weakened the indices. And it looks like it's probably going to continue higher. You can see price is moving with a delta in this scenario. Okay, so that's a lot to cover. Let's really quickly look at what we've got today. What do we have on our flex levels? We still have our gap below. Okay, we still have all-time highs above at 23.98. So the expectation this morning is an open. I expect a fair amount of resistance right up here at 23.89. I'm looking for responsive buying into that area. I'm looking for it to fail, turn, and then start to push lower. I'm looking again at the market pushing down to 23.75. 23.75, 75 is the area that I would target today. It's got plenty of range. This is the most likely scenario right now. Of course, trade your own plan and always mind your risk. You're responsible for your own trades. This is how I'm seeing things. But I'm looking for responsive buying. I'm looking for resistance around 23, 88.50, 23.89, and then for the market to turn at that point. I expect a fair amount of liquidity to show up. If you have Bookmap, you'll see that in the form of white lines and a lot of heat in those areas, and the market unable to sustain a push through, and then it starts to roll over as the weaker hands start to sell, and then that precipitates into more selling and a push through the lows. That's the key plan for today. If we do get a push lower first and it stabilizes in the range, then your first target is likely to be the point of control, and then a push higher into these this weak double top that we left behind yesterday. 95 becomes the key target to test, likely to exceed by a few ticks or so, but that's what I'm looking for hypo 2. Okay, so there you have it. Both your hypos, as always, mind your risk and just trade your plan. Stick to your plan. Don't start to do all this homework, spend a lot of time in front of the screen, and then once it's time to execute, you go and do the exact opposite because you don't believe in your plan anymore. Okay, good luck today, and I'll catch you tomorrow. Take care.